This matters now to our guest host. Howard Ward is at Gamco. Mr. Ward has been long and right. He maintains that optimism into the new year. Stocks will prosper on okay revenues, better than okay earnings growth, and use of ample cash. It will ensue. We need to get to the details right now. What's distinct now from February of 2009?
From February of 2009? Oh, my goodness. Well,
things are a lot richer price now than they were then.
Well, you're talking 15 to 16 times forward earnings in the market right now with just under a 2% dividend yield. Earnings are growing. I think the third quarter earnings growth is about 9%.
Yeah.
I would expect that 2015 is going to be similar to that 8, 9, 10%. That's above consensus. I think that's where the economy is going with some acceleration. So importantly, confidence is back. 2015 is going to be the fifth record year for GDP growth and profits. And so I do think that confidence plays a huge role in the economy and the stock market.
How do you guys, is what I'm going to call value, not value trap, buyers respond to people like Robert Shiller that would suggest, given any kind of ratio analysis, we're richly priced?
Well, I'm going to disagree with Mr. Shiller's work because it's backward looking. Now, I know it has some real historical validity,
right?
So I'm not going to just dismiss it out of hand. But my focus has to be on the next 12 months, the next 24 months, not on some average of the past. The stock market is pricing itself on the future. It is not pricing itself on the past.
Okay, so you're optimistic about the future. What about technology, and particularly cloud-based, the shift to cloud? Not Apple, but the hardware kind of companies like IBM and Cisco. When you look at them, is there extraordinary value there?
I think you have to be very careful there. And you mentioned the cloud. The cloud has been enormously disruptive for a lot of these big legacy enterprise, big iron type companies. The era where you could sell $1 million box with a big service agreement attached to it is not what it was. There are lots of alternatives for that customer base that are far cheaper. And so I think that some of those companies are really going to be challenged from a growth perspective. They do throw off a lot of cash. They may ultimately get more revenues from the cloud and becomes a positive for them. But right now, the cloud, while it might be their future, it's a headwind.
Okay, well, there's a professional perspective.